to another episode of the 10,000 Trade Show, where we are mastering trading and creating excellence through the deliberate practice and analysis of 10,000 trades. In this episode, we'll take a look at how to use volume in Forex. Volume can be a very good tool when used with a combination of price action. So we'll take a look at what role volume plays and how to combine it with price action to take great trades. Here we'll take a look at how to use volume to trade Forex. This is pound US dollar 1 hour chart. I like to combine using volume with price action. Price action on its own is good. However, when we use volume, it just gives us extra information and it can help our decision making better. So in this case, we are looking at a short trade here. We have a bearish engulfing candle. And in this case, what we'll do is we'll combine the volume with it. But from price action perspective, what we see is that price had been going up, forms a high, starts to drop, pulls back into the previous support resistance area and gives us a bearish engulfing candle here. So once we see this candle, we would take a trade short. So now we can use our volume to confirm our analysis here. So if I were to put our cross here on top of our bearish engulfing candle here, we see that prior to that, the volume had been green. So volume was red coming down as the price was coming down. And then as price starts to pull back, we see the volume is green. And once we get the bearish engulfing candle close, we see that the volume shifts to red here. So from volume perspective, this is a good sign. So we have different factors coming together. We have confluence, which gives us a higher probability trade. So from price action perspective, we have a bearish engulfing candle close. We also have our support resistance where the price is pulling back into. And from our volume perspective, we see that the volume turns from green to red. So this gives us the confirmation that sellers are in charge and price is likely to push lower now. So we would enter our trade short after we see this bearish engulfing candle close. We can look for a bit of a pullback here, enter the trade short. Our stop will go above the high. We just want to make sure price has enough room to breathe so that in case it goes back up again. So we enter the trade short and then we continue on. As we continue on, we see that price drops and our volume is increasing, which is a good sign, which means the momentum is increasing to the downside. And as we get this big drop here, the volume is at its highest, which is a great sign because that shows the momentum has really shifted to the downside and it is increasing. Now, once we get to our candle at the bottom here, we see that price is dropping here. However, our volume shifts to white here. White is a neutral volume. So this tells us that price is likely not going to drop now and it could even start reversing. So in this case, we can exit the trade once the volume has changed to neutral because now it can start to pull back. As we can see, it pulls back here. So normal, if we were just trading from price action perspective, I would wait for this bullish engulfing candle to close here and then exit the trade. So using volume here gives us these extra pips here. So our profit is larger as a result of combining the two as opposed to using them separately. So from entry to exit here, we get 108 pips in our trade. Just to recap, I use volume as a way of confirmation and it shows when it's the right time to enter or exit the trade. So in this case, we have a bearish engulfing candle close here and our volume changes from green to red here. So we get a short signal. Volume is in line with our short signal. So it's a good place to enter the trade. And as price drops, we see that volume goes up, which shows that there is momentum to the downside. So we stay with the trade. And here we see that even though we have a red candle, but our volume has shifted to white. So this is a place for us to exit the trade. So from entry to exit here, we get 108 pips in our trade. So our profit is 108 pips or $1,080 if trading one standard lot. Thank you so much for joining me today. I hope you enjoyed this episode. If you like this video, please feel free to like it, subscribe to the channel, and also share it with your friends. And I'll be back with another great trade setup next time.